It's Friday, 5 p.m. Your bank locks its doors, like it does every night. Except tonight, it isn't closing for the weekend. It's closing forever. Your paycheck is in there. Your rent is in there. And in a government office somewhere, people have known this was coming for weeks. In the next few minutes, you'll see what actually happens to your money in the 60 hours after a bank dies, the secret auction, the midnight crew, and the $150 billion fund built for exactly this moment. Because in the US, a bank failure looks nothing like the picture in your head. And here's that picture: a crowd on the sidewalk, fists on the glass, a teller pulling the blinds. That picture is real. It's just about 100 years old. Between 1929 and 1933, American banks died by the thousands, roughly 9,000 of them. More than a third of every bank in the country. And back then, when your bank died, your money died with it. Families lost everything, not because they spent it, but because they put it somewhere safe. Think about that for a second. The responsible thing to do with money was the thing that destroyed it. So in 1933, the government built a machine to make that impossible. The Federal Deposit Insurance Corporation, the FDIC, a promise printed near the front door of nearly every bank in America. If this bank dies, your money doesn't. The promise started at $2,500. Today, it covers $250,000 per person per bank, and it became one of the most reliable promises the U.S. government has ever made. Since 1933, not one depositor has lost a single penny of insured money. Not one. Ever. But that raises the question nobody asks. When a bank actually dies, how? What happens inside? The answer is a covert operation, and it starts weeks before you hear anything. Regulators watching a sick bank don't announce it. An announcement would cause the exact panic they're trying to prevent. Instead, the FDIC quietly shops the dying bank to healthier ones. Confidential files? Sealed bids. The bank is being auctioned for its own funeral while it's still breathing. Then Friday comes. In the US, banks almost always fail on a Friday, right at closing time. The doors lock, a regulator declares the bank dead, and an entire FDIC team walks in. Dozens of people who checked into hotels around town without saying why. And here's the part that should rewire your brain. Their whole job all weekend is to make sure you never notice. That's not a cover-up. That's the design. Saturday and Sunday, they work through every account, yours included, and transplant the deposits into the bank that won the secret auction. Your balance, your history, your direct deposit instructions. All of it moved into a new body. Monday, 9 a.m., the same doors open, often the same tellers. A different name on the wall. Your card worked the entire weekend. The bank is cooked, and your checking account is completely fine. And when there's no buyer, then the FDIC just pays you a check or a new account at another bank, usually by the next business day. Which raises a better question. Paid from what? Not taxes. Every bank in America pays premiums into a fund at the FDIC, like an insurance bill, priced by how risky the bank is. Riskier bank, bigger bill. That fund holds about $157 billion right now. Read that again. Every bank in the country is prepaying for the funeral of the next bank to die. But the strangest object in this story belongs to the people with more than $250,000 inside. Because the promise has an edge. Per person, per bank, per ownership category. And above that line, the insurance simply stops. So what do you get for the money above the line? A piece of paper. It's called a receivership certificate. And it is, quite literally, an IOU from a corpse. The FDIC spends months, sometimes years, selling off the dead bank's parts. Its loans, its buildings, its furniture. And as the parts sell, the certificate holders get mailed their share, piece by piece, like an inheritance. Historically, most of it usually comes back. But there's no promise anymore. Above the line, you're not a customer. You're a creditor at a bankruptcy. So Friday, 5 p.m., the locked door, now you know what's happening behind it. A night crew with briefcases, moving every account into a new body before sunrise on Monday. A bank failure isn't an explosion. It's an organ transplant done at midnight. Here's the question to sit with. That red line, 250,000. How much of your world sits under it? You've probably never had to ask. And if you think it's strange how money leaves a dying bank, wait till you see how it gets into your account in the first place. Your paycheck takes a journey every 2 weeks that almost nobody has ever seen, and it spends the night before payday somewhere very unexpected. That's next time. And remember, None of this is financial advice. Alex is a cartoon. He can't legally advise you on anything.